Hi there, good morning. You've tuned into ET Now, and this is Vaina Sell Now with me, Shail D'Souza. And today, along with me, I have Soumit Sarkar. And Soumit, let's take a look at what the markets are doing right now because we're flip-flopping between the gaining end as well as the losing end. While, however, if you look at the advance decline ratio, very much still tilted in the favor of the gainers. We're talking about the minute details of the markets and talking about the list of gainers and losers. If you look at the list of the gainers, is Bajaj Auto that is actually standing pretty strong in trade today. 2.9% uptick coming in for Bajaj Auto, followed by Sun Pharma. You have Tech Mahindra also seeing good gains in trade, as well as Eicher Motors. And add to that list heavyweight, Reliance Industries, 1.3% uptick coming in for that major. And that's the reason why you are actually seeing some sort of green on the screen when it comes to the Nifty. While on the flip side, it's ITC, ICICI Bank, Power Grid, JSW Steel, as well as Coal India that are actually lagging in trade today. Nifty Bank is actually underperforming the benchmark index. 0.3% downtick coming in for Nifty Bank as we speak. Talking about the sectoral indices and what's the color there right now, it's red coming in for realty, FMCG as well as banks. Even power is a bit subdued in trade. While on the flip side, pharma is the top sectoral gainer as we speak. We have broader markets also holding on to strong gains along with IT as well as auto. So that's the way how the markets are looking like at this point in time. But IT index, Soumit, is astonishing. What a comeback that this particular sector has made over the last 2 weeks or so. But what's your take when it comes to the banks and the IT?
When compared to banks, if you see Nifty, IT and bank have always been in the two other ends of the market. And that's the trend that we are seeing for the last 15 years. From 2008 to 2023, what we are seeing is that both the sectoral performers like Nifty IT and Nifty Bank performance has largely always been divergent. Like in 2009, Nifty IT index was up around 166%, but Nifty Bank index was up around 81%. This year what we are seeing is Nifty IT index is up around 25%, while the Nifty Bank index is up around 12%. So Nifty Bank has been an underperformer as compared to Nifty IT in 2023. So one thing that we have noticed here is that in the last 15 years, if you remove the COVID-19 years, that is 2020 and 2021, Nifty Bank has not underperformed the Nifty IT index for 2 consecutive years. So 2023 was an underperformance. So 2024 could actually be an outperformance for Nifty Bank going forward. Now, few factors that we are noticing here which could actually be in favor for the Nifty Bank index. Firstly, if you see the earnings growth for Nifty IT and Nifty Bank, most of the brokerages are expecting Nifty Bank index to outperform, but on a consensus basis, if you see bank index EPS is expected to marginally grow at a higher rate when compared to Nifty IT, not only for FY25, that is the next financial year, but also for FY26 also going forward. Ownership trends, if you see as per November 2023 data, what we are understanding is that the FPI allocation in banks and financials have been falling for the 5th consecutive month. In fact, FPI allocation in IT has remained largely stable. And domestic funds, if you see, they have also decreased their bank and financial weightage to around 29.5%. from 31% that we had seen earlier. And in the IT sector, if you see, in fact, the weightage has increased from 9.1 to 9.4. So another factor in favor of banks is underperformance from both FI and DI side under ownership, both from FI and DI side. And lastly, when it comes to valuations, IT index, in fact all stocks also in the IT index are trading at an expensive valuation compared to their historical averages, while bank stocks are trading at a lower valuation. Nifty Bank 12-month forward valuation price to book, that is, stands at around 1.9 times, while its 3-year average, 5-year average and 7-year average has always been around the 2.1 times, while Nifty IT index 12-month forward valuation, that is price to earnings here, is around 26.6 times, while its 3-year average, 5-year average and the 7-year average have always been around 21 to 23 times. So Nifty IT index is trading at a premium valuations. Now our managing editor Nikunj Dalmia also spoke about this, and he also gave his information on why IT has actually outperformed the banks. Let's hear his take.
The general assumption is that if US slows down in the short term, they will have to take a hit in terms of their visibility. Now, the reason why IT is moving higher is because it did not participate, and these stocks are not at an all-time high. So the headroom for markets now to buy something which has not participated, or something where in a sense there is going to be this entire catch-up effect, I think is clearly visible. Now, what do you look at IT? Well, there are two ways to look at IT. That's price to PE, not PB. Stocks cannot trade at a price to book of 26 times. Where is IT trading? If one really looks at the IT stocks right now, well, IT stocks right now are not trading at levels which are below the historical average. They are just in and around there. Second, the AI threat I think is real. See, whatever is happening in US markets, I think if the economy slows down in the near term, first there would be more, there would be more contraction, and then it's only in the second half of 2025 the repair will actually start. Surprisingly, IT Aisha this year has done much better than banks. Nobody anticipated at the beginning of the year that despite guidance cut, management commentary, delay in order books, no hiring, issue in terms of where the AI is going to be changing the business model, IT has done much better than the banks. And the simple logic here is that this is a complete contra trade which people are buying, thinking that this year the turn in a sense IT, the downturn in the sense for IT would be over. So I don't think from a risk reward ratio standpoint there is going to be big money to be made in IT here in large cap IT services. Small companies, you got to pick your spots there. I mean, there are so many niche players, those companies are doing such individual things which are so strikingly different. That's a very different and a very, separate conversation. But in general, maybe I've got it wrong, or maybe that's the way I think. I think IT in a sense right now does not give you that kind of a launch pad for a great return for 2024.
All right, so that's the take coming in from ET Now, and ET Now Swadesh's managing editor Nikunj Dalmia on banks versus IT debate. But let's ask our experts which side of the fence are they. So let's bring on board. We have Kunal Bothra as well as Vivek Karwa joining us on the show. Very good morning to both of you. And Vivek, let me start first with you to get your analysis on banks versus IT. You had Soumit as well as Nikunj talk about it, especially Soumit saying the fact that the IT stock valuations are pretty high when you compare them to the banking stock. So keep that basis in mind. Do you think that this time around you'll have banks play a catch-up and IT take a breather, despite IT actually now playing a catch-up after a tad bit of underperformance through the course of the year?
Good morning, everyone. In fact, BFSI sector I have been recommending on every show since past 6 months, and even IT. Now, IT in October approximately it was at 30,000 levels, Nifty IT index, and today it is at 36,000. So, which is almost 20% returns. So, which is actually a good run for the kind of economy what we are seeing in US. And with again US getting downgraded on daily basis, and there was some negative rating recently also. There might be cap on the run what IT will see. But what I assume, if there is rate cuts which would likely happen, because Fed was saying that they might do 3 or 4 rate cuts in 2024. If rate happens, then there might be some kind of confidence. But I'll still be more bullish on banking and financial services, because that really looks cheap for whatever the market has done till now. In fact, the large cap banks have not at all run. If you look at HDFC, ICICI, Axis, IndusInd, all these banks are still struggling, and I think 20-25% returns over there is not impossible. And if that happens, you can imagine where Nifty Bank index would actually trade. So I would definitely be more bullish on banking and financial services. That's again backbone of the economy. If economy has to do well, these companies have to actually do well. So any sector performing, the money is going to come into the banks. Now, IT also, I would go in SIP mode. I'm not negative on IT. I'm also bullish on it, but I would go on SIP mode because it has already given 20% returns.
Well, thank you, Vivek, for that. Kunal, what's your view when it comes to Nifty Bank versus the Nifty IT index?
See, I would be both the spaces. I think Nifty IT index as well as Nifty Bank, both of them are looking attractive. We have to also look at the context of where the stocks or the sectors were in terms of the entire market construct. Both these sectors were the major reasons why the indices had not performed very well in the market breadth. In the large cap front was looking a bit more staggered, but this time around you've seen a complete change of trend for these large cap IT stocks and the large cap banking names, and specifically concentrating on the private sector banking stocks, as well as a formidable one from the PSU name, that's SBI. I think these stocks have come back into a strong bit of outperformance for themselves, or at least an outperformance of the previous behavior for themselves. So I would be bullish on both the spaces. And I strongly believe that the Nifty IT index, even from current levels, has more room on the upside, because when you see large cap stocks participating in such a kind of a gusto, we expect this to be a strong trend in the making. So I would be bullish on both the spaces, even on the Nifty IT index.
All right, so Kunal is putting his bucks on both of the counters, both of the indices, as Nifty Bank as well as IT expects a good outperformance from both of them going ahead. Soumit, let's see which camp actually wins in the year 2024. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock related queries. Viewers, you know what you have to do. You have to just write to us on the WhatsApp number that will be flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in, that stock as well. Mention the name of that one. And if you're already invested in a stock, then mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as Vivek Karwa on the show with us. A very good morning once again to both of you gentlemen. And let me kickstart the queries with you, Vivek, today, because we have a query coming in from Rita, who's writing to us from Kolkata. And she's saying, considering the government push for smart metering solutions companies, do you think Genus Power as well as HPL Electric are good companies that she can buy right now to create long-term wealth?
Shiril, see, this news is not new. Everybody knows that government is already pushing towards power metering, and what is going to happen is the reading which used to be taken in the building will now automatically happen like telecom industry at the electricity board itself. So this is already known, and that's the reason HPL and Genus has already seen this kind of run up. And at this valuations, definitely they are not cheap. I would surely be bullish for long term, because the power, I said, digitalization is still long due, and it is going to take many years to fully complete it. But on dips, yes, I would prefer. Right now, it's too costly. But yeah, on corrections, they are good companies to bet on. If you want to buy really right now, you maybe just allocate 20% of your capital and then 20% on every 10% dip.
Queries for you from Sridhar from Coimbatore, and he's holding Vaibhav Global and India Bulls real estate, and he's asking whether should he continue to hold or exit at current levels.
So I'm not sure of the buy price for the investor, but I'm assuming that he must be at least at parity or in profits for both of these names. I would suggest to hold India Bulls Real Estate, because that's a stock which is looking more formidable in terms of a turnaround. Weber Global is somehow getting into a consolidation, so you can continue to hold on, but then I would probably keep or advise keeping a stop loss of 380 on the stock. So till the time it trades about 380 levels, you can continue to hold on. But I think India Bulls Real Estate is more of a formidable chart.
Well, actually, he has mentioned his buy price for India Bulls Real Estate. It's at 172, and for Vaibhav Global, he has bought it around 799.
So I think in that case, then you can look to average also India Bulls real estate at current levels, so that you can try and lower down your cost price and come maybe closer to 115, 120 mark. So the quantity has to be proportioned accordingly.
All right, this one is coming for you once again, Kunal, and this one is coming from Tina, and Tina has a query on Garden Reach, 400 shares at a price of 930, as well as 600 shares of high-tech pipes. I'm not sure that you tracked this one, but the buy price is 100 rupees per share. She wants to know what should she do with both of these counters, hold on to them or look to exit, and if you suggest that she should go ahead and exit, then where should she park the money?
I think you should continue to hold on both of these names. Garden Reach, even though the stock has gone through a time-wise correction, but the long-term charts are still very positive for the stock price, and it's bound to be, because after such a kind of a strong meteoric rise in the last 1.5 year, you're bound to see these stocks go into a time-wise correction. So I believe maybe another few months of odd time-wise correction for the stock, but the chart patterns look very attractive. So would be the case with high-tech pipes.
The next query is from Bharatwaj from Coimbatore again, and it's for you, Vivek. He's holding around 670 shares of IEX at a price of around 126. He's asking, should he buy more at the current market price? He's looking to hold for the next 2 to 3 years.
See, if you seriously go and study the business model of IEX, it is an exchange wherein for small margins, the trading of power happens. So if one state wants to buy, they would come and demand on IEX, and the other state would actually buy. So, sell it. I'm not bullish on this stock at all. In fact, when the stock was at 250 levels, I was one person who was screaming sell, and even at this rates, I would not buy. So on rallies, it would be a sell because market is bullish. Yeah, it can rally further, but on every rally, I would prefer selling.
Right, this one is coming from Vinod. He's writing to us from Trichy. This one is specifically for you, Vivek. He has Den Networks, which he's purchased at the current levels. He wants to know whether he can hold for the short term. And also KMC Specialty Hospitals, he has 100 shares holding for the last 20 years. He's saying that this company does not have much growth, but should he stay put with this one or look to exit? He's also mentioned that this was his father's gift to him. So what's your take coming in on KMC Specialty if you track this one? And Den Networks if you want to comment on the short term.
See, KMC specialty, I would prefer holding it. At this valuation, I think the real estate value over there is bigger and hence the stock might recover. But see, in markets, you cannot be emotional. When you're in markets, think by brain and not by heart. So even if it is your father's gift, you can always say if he has given you gold, try to convert it into diamond. I would prefer converting KMC into hospital like KIMS or even Rainbow Children. They are interesting place in healthcare space. And I'm telling you, healthcare is one segment which is really going to do very well over next 5-10 years. So you can also possibly gift Rainbow Children to your children. That would be my first suggestion. Then networks, I think the kind of digitalization, again, what we are seeing, you should hold it on at these levels. Though the stock is not cheap, but yeah, you can risk that hold.
The next query is from MVS Rao from Hyderabad and it's for you, Kunal. He wants to know the short-term target for Bajaj Finance. He's holding around 60 shares, purchased at a price of around 7,200.
See, I think in this leg of uptrend, the stock has formed a cup and handle pattern. The pattern height is approximately 500 points. So 7,500 has been the breakout for Bajaj Finance. And the depth of this is closer to 7,000 or just slightly below 7,000 mark. So roughly, I think 500 points is what I would expect in upside from that 7,500 mark, which should be closer to 8,000 as a short-term target for the stock.
All right, that's Bajaj Finance target. But happiest minds, Kunal, for the short term, how does it look? Because our viewer who's not mentioned the name actually has 13 shares at a price of 911 rupees per share.
So I think you should continue to hold on. I'm not sure what your time frame is, but I think the stock has gone through a major correction already from 1500 levels to I think at a point when the stock was at 800 odd levels or slightly below. So I think the major price-wise, time-wise correction has happened. It could be a good time to hold on to the stock since you've bought at 911 levels. I would believe that it's a very recent purchase and I think you should hold on to it for at least another 6 months or so for the entire trend as well as the rally to play out.
Well, thank you, Kunal, for that. With that, let's slip into a short break and we'll address more investor queries post that.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And this one is coming in from Murli, who's writing to us from Bangalore. And Murli has given a couple of queries. Let me take the CCL products one then. This one is for you, Vivek. He has about 2,000 shares of CCL products. He purchased at levels of around 640 rupees per share. For the medium term, how does this particular counter look to you? And let me add to that, he also has Hawking Cookers, 100 shares at a price of 1,460 rupees per share. What's your take on both of these counters? What's the prospect looking like?
See, both the companies are good companies, Shiril. First of all, CCL products, say it is trading at fair valuation. So I would not say that the stock is going to rally or correct in big way. It would keep performing the way it is performing right now. And even in this space, the coffee space, the company is one of the strong-footed company next to Tata Consumer. So it would be a hold on CCL products. Hawkins, say till now, what was happening is the consumer discretionary space was not doing good. And I feel this year, the ensuing year, this space also should start performing. And that we are already seeing the signals in all consumer discretionary companies. So Hawkins also is a great company. I think you should hold it on. Medium term, again, it is not going to give you big rally as such, but yeah, it surely is going to be a market performer.
Well, the next query is for you, Kunal, and it's from Srinu from Vijayawada. He has bought SBI at around 590, around 200 shares. Where can he book profit, or is it time to hold or add more at current price?
I think you should continue to hold on. You can look to add also at current levels. if you have a slightly moderate to higher risk appetite, yes, the stock has run up, but I believe that it's confirmed a breakout for itself. I think the near-term targets which I am looking out for, expecting for SBI should be closer to 680 mark. Wouldn't be surprised that if the stock actually crosses this 700 mark pretty soon in this leg of uptrend.
All right, taking the next one then, and this one is coming in from Sangeeta, who's writing to us from Bangalore, and she wants to know about anything about Cafe Coffee Day shares, actually, Vivek, and she has 101 shares making a 15% profit. Do you think she should actually stay put this one for the longer term or just book out profits right now?
See, first of all, kudos to the wife of late founder after his let's say expiry or after he died. The She has actually taken the company in a very good manner. In fact, reduced debt, and anybody else till by now would have say flown out of the country, right? This is what we have been saying. But she has stayed and trying to just revive the company. So you can risk little money on it, but there are many other issues because the debt is still high, and there are NCLT suits also against the company. So all these things would carry on for next at least 2 or 3 years more. So you risk some capital. It is either going to be it's a do or die kind of stock. And if you want to play blind on this, yeah, you can risk little capital. But I would not suggest heavy buying it.
Next query is from Madhusudan from Hyderabad, holding a Taj GVK shares, around 200 shares at a price of around 251. He's asking whether should he hold or switch to some other stock for long term. Vivek, the query is for you.
Sorry, this for me?
Yeah.
Okay. Taj GVK, I would say hotel space is good. It is going to really continue doing well. And again, we are going to see this quarter as fully marriage season. So up to March, you're going to find that a lot of marriages are going to happen in India. And I was seeing some estimate wherein 27 lakhs or some marriages are going to happen. So Taj GVK looks good. And if you actually want to shift somewhere, then EIH also is a good hotel. But I am okay with Taj GVK. It's under one peg ratio right now, and it can still give you at least 20% returns from here. So hotel space is interesting, and Taj GVK and EIH both are good.
All right, that's the space. That's the take coming in on the hotel space then, and this one is coming from Sarojini, who's writing to us from Coimbatore. And Kunal, this one is for you. She has about 5 odd shares of TVS holding, which she purchased at the levels of around 7,500 rupees per share. What's your take coming in on this particular counter? Should she stay put with this one, given that it's a holding company? It's already made a good set of profits for itself, at least for the viewer. What should she do? Stay put with it?
Yeah, stay put with it. And I think after a gap of maybe 4 or 5 years, 2017, 18, so 5 years plus is where the stock has made a comeback in terms of a breakout. The last 1 month or rather this month so far has been quite spectacular for the stock. It's up some 40-43% so far on a MTD basis. So I think again an exceptional move for the stock, and coming out after 5 years of consolidation also augurs very well. So I think you should try and ride on to the entire trend for TVS Holdings and continue to hold on.
Vivek, the next query is again for you, and it's from Narasimhan from Bangalore, and it's on SJVN. The stock was downgraded by Goldman Sachs in the morning to a sell from buy, and this was on the back of expensive valuation. Now, Narasimhan holds around 3,750 shares of SJVN at a price of around 73. What should he do? Should he continue to hold, Vivek?
See, last week also when I was doing this show, SJVN came to the, we had a query on this, and I was giving a call. I would continue giving a sell call. See, I am bullish on renewable energy. It could be wind, solar, and normal energy, but not on water. And this company focuses on hydroelectricity, which I'm not comfortable with right now. So booking profit would be good, and the valuations are also high, and that has been proved by again the research report as well.
Okay, that's the take coming in SJVN. This one is coming from Sushil, who's writing to us from Bellary, and he wants to know whether he should look to enter IREDA at current levels. What's your take on that, Vivek? IREDA, the spectacular rise that this particular counter saw actually post its listing today. It did open gap down, but now the stock has actually managed to recover This month alone, ever since it's listed, look at the gains that this one is posted, 86% odd gains. What's your take? Do you think now is the time to enter, or still wait for more correction in this one and then look to actually chance your arm in this one?
See, market is assuming as if this company is only going to fund all the renewable energy projects coming up in future across the world. That's not going to happen. And the valuation at this rate, 112, actually looks quite stretched. Now, market is supreme. It is just rallying. It can rally more. But if you strictly look at the valuations, you should be careful. So when everybody is bullish on this stock, I would really be cautious. And not just because everybody is bullish, because of valuations too. So I would not buy at this levels. Yeah, on dips, I can look at it, great company, but value is something you get, and the price is something what you pay, right? So I would not pay this price for this value.
Well, Kunal, the next query is for you from Sita Kalyani from Hyderabad. She owns around 500 shares of Paradip Phosphate at a price of around 67. She's asking for your advice whether should she continue to hold or switch to some other fertilizer stock.
So you can continue to hold on. The stock has been trying to scale past about the 74-75 mark. There have been multiple attempts. I think in the last 7-8 months of history, the stock has, I think in the last 3 or 4 months, has attempted this level of 74-75. I think 4 or 5 times, but it's unable to cross about those levels. But the only change this time around is that the volumes have been slightly higher for the stock in this leg of uptrend as compared to the previous attempts, which means that the stock stands a higher possibility of breaking past the 74-75 mark. And whenever that happens, I would believe that the stock can probably give a quick 10 to 15 points upside, which means closer to 88-90 could be a target which you can eye for Paradip Phosphate.
All right, Kunal, next one is for you, and this one is coming from Neela, who's writing to us from Chennai, a retired banker who has been invested in the market for the last 3 decades, a long-term investor. But now her suggestion is whether she should hold counters or book profits. And the counters are, one is 200 shares of Solar Industries at a price of 1900 odd levels, and the other one is JSW Steel, 400 shares at a price of 735 rupees per share. She wants to know whether she should actually look to hold on to these counters, or now is the time she books profit and exit both of them.
See, I think Solar Industries is what you can consider booking out profits because of the extreme overbought nature of the indicators on the monthly as well as on the quarterly charts. That is one of the only reasons why I would suggest a book profits over here. But JSW Steel is something which you should continue to hold on. I think the metal stocks and the metal rally is just getting started with, where I would believe that there should be more meat ahead for many of these metal names going forward. I think you should continue to hold on JSW Steel. In fact, if possible, then the quantum of selling which you can do for solar, you can shift to another metal name. I would recommend either SAIL or Tata Steel.
Well, thank you, Kunal, for that. With that, let's slip into a short break and we'll address more investors' queries on the other part.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your queries then. And this one is coming in from Sunil Kelkar, who's writing to us from Pune. And Kunal, he has 8,400 shares of Cummins India, which he purchased at around average price of 50 rupees per share in the year 2001. Now he wants to know whether he should stay put with this or look to exit. His stake is for long term. So let me take this to Vivek instead. Vivek, what's your take on Cummins India? The viewer is making hefty profits on this one, has been holding it for the long term. Do you think furthermore holding period for this one, or should he look to book profits and put that money in some other better counters, which he will be able to get some more returns from?
Dividends, the debt has reduced, and if you look at long-term performance, also the company is doing good. And overall, the capital goods segment and particularly the power segment also would continue doing well. So I would just because it's in profit, need not necessarily book. You should hold it on. The stock looks not very costly as well. It's okay, about average, but reasonable price. So you hold it on.
Query is for you, Kunal, and it's from Ranjit from Gurgaon. He's holding around 200 shares of Aarti Industries at a price of around 550 rupees per share, and he can continue to hold for the next 3 months. He's asking your advice whether should he hold, exit, or buy more.
So I think you should continue to hold on. I'm not suggesting to buy more because I would probably expect some sort of a time-wise consolidation at 600 mark for Aarti Industries. Wouldn't be surprised if the stock actually drops down a bit from current levels to say 580, 585. from current levels, but that could be a point where you may look to average further. So I think it's a good stock to hold on. The stock has confirmed, a strong bit of a turnaround for itself, at least in terms of the volumes, the indicators over the last 2 or 3 months, and we've seen the stock recover from 500 to now 600 approximately for itself. So looks attractive from the long-term setup, but not a ad at current levels.
Right, Kunal, another one coming your way, and this one's coming from Karishma, who's writing to us from Delhi. Grateful to you because she's made good profits in CESC as well as Bank of Maharashtra. But now she's saying that she wants to invest a lump sum of about 5 lakh rupees. But she was looking at a PSU banking space as well as PSU railway stocks. She wants to know out of these counters, which one she should look to buy right now at what price for the medium term.
So I think from PSU banking stocks and railways, specifically if you're asking me, I would probably suggest PNB as one of the best picks from the PSU lot at current levels. Looking at the chart structure, you can add to that maybe a Union Bank. That's the two names which I'm very bullish on from current levels also. And from the railway space, I think it's very difficult to try and narrow it down to just a couple of names because all of them, they tend to move in a very synchronized manner. More or less these charts are structurally very similar to themselves. But if I have to pick, then I would probably go for IRFC as well as ERCON.
Well, the next query is for you, Vivek, and it's from Debashish from Kolkata. He's holding shares in 3 oil marketing companies, BPCL, Chennai Petro, and actually it's not an oil marketing, Oil Explorer, and that is ONGC. He's asking for your advice whether he should continue to hold further for medium term or sell and book gains and invest in other stocks.
See, when the crude is going down and literally not moving up, I would be bullish on oil marketing companies as they would benefit more than the oil exploration companies. And that's the reason ONGC has seen a small correction also in recent past. So I would avoid exploration companies and go with marketing companies if really I need to be in oil sector. So that would be my call.
Would you advise him to hold BPCL and Chennai Petro then?
And BPCL Chennai Petro, yes, he can hold on.
Okay.
All right. The next one that is coming in from Parth, who's writing to us from Vadodara. And Kunal wants a view on Gravita India. He wants to take fresh positions in this one.
I think Gravita India has been a very strong mover. I think on the long-term charts, it's almost been like an exponential move for the stock from 100 levels or sub 100, in fact, in 2020 to a point when the stock had hit 1100 mark or plus those levels just few weeks back. So I think it could be a good time where you may look to wait out for a significant correction. The RSIs, etc., on the monthly, on the quarterly charts are extremely overbought. So I would suggest a wait out for the investor, the viewer to try and buy the stock. I would suggest maybe a level of closer to 900 could be a good starting point.
The next query is from Deepak from Gandhinagar, and he's a long-term investor. He has around 240 shares of SRF bought at a price of around 2,400. Vivek, should he continue to hold, add or sell the stock?
He should hold it on. This is one company. It has become Nestle's of the world, and or Asian Paints of the world, wherein every dip is a buy, and longer term it is going to give you returns. So again, the chemical space has actually not yet started rallying after the dip. It is still waiting for a up move, and I think that would soon happen. So please hold it on.
Kunal, this one's coming from Venkatesh. He's writing to us from Indonesia and he's asking if you could give a recommendation to buy 3 stocks for the longer term during the lull activities of FII, during the lull FII activities in the next 2 weeks, because yes, we all know that global markets are shut. Most of them actually go on a holiday. I think most of them are already on a holiday. But Kunal, what's your take? Which are the stocks that he can look to invest in the very near term?
So I'll recommend 3 names. So CESC is one of the stocks which I'm very bullish on. I would probably expect the stock to break past about the previous life highs and move higher from those levels. So that's a stock which I would recommend first as a pick. You can probably keep a target range of 150 or slightly beyond that. So I would be very bullish on the stock even from current levels. IRCTC is something which you can keep. The only catch with IRCTC is because of the high beta nature of the stock price. So it's better that you try and have a slight lower position size at current levels and try and take advantage in case if there is any kind of a mild correction. And you can also look out for Tata Steel. I think that's another name which is looking very attractive on the charts and heading towards a very strong inverted head and shoulder breakout, which is almost like a 15 to 20 point breakout for the stock in a very short period of time span.
All right, with that, actually, let's kickstart with the rapid fire then. And this one is coming from Anant Naik. He has 20 shares of Gabriel at 150 rupees per share. Kunal, sell or hold?
I would suggest to hold on to the stock.
Vivek, this query is coming in from Nalini Jindal from Patiala, and she wants to know whether she can buy Biocon for 3 years. Vivek, the query is
Biocon's sister Syngene would be better than Biocon.
All right, this one is coming from Sagar. Voltam Transformers. He's holding from the levels of sub 950 to 1,000 rupees per share. The stock has performed well. Long-term view on the space, and do you think this stock should be a hold in the portfolio for the long term, Vivek?
Yes, hold it on. Valuations look still cheap.
Well, the next query is for you, Kunal, and it's from Kamesari from Hyderabad. Holds around 60 shares of IRCTC at 40. Should continue to hold or sell?
Hold.
All right, this one is coming from Karthikeyan, HBL Power. We've already addressed on that particular counter, so let me take this one. Padma Siva Rao wants to know if there's any other company like Vector Foods around 700 rupees that he can look to buy. Kunal, anything like Vector Foods coming to your mind?
Zydus Life.
Well, the next query is for you, Vivek. It's from Sachin, and he has around 50 shares of MRPL at a price of around 60.9 rupees. Should he continue to hold or sell?
No, I lost the company. Which company was it?
MRPL.
MRPL, I would avoid.
Okay, Sayak wants to know Tin Plate 200 shares 178 rupees and Map My India 100 shares at 1,510. Stay put with these ones for the long term, Vivek?
Tin Plate, you should book profits, and the other company, Map My India, is a buy.
And the next query is from Nishi from Bangalore, and it's on a couple of stocks. First one is NetWeb. She's holding it from the IPO price, and the second one is Ultratech, which she has bought at around 7,000. Should she continue to hold or book profits, Vivek?
I would book profits on both.
All right, another one your way then, Vivek. Piramal Pharma. Is it a buy for a period of 2 years? Arjun wants to know.
Yeah, strong buy.
All right, with that, I believe we have come to an end of the rapid fire, actually nearing the end of the rapid fire. And thank you so much, Kunal, as well as Vivek, for joining us on the show and resolving all of our viewer queries and also talking about the big debate that's on everyone's minds, banks versus IT. But with that, we are out of time on this edition of Buy Now, Sell Now. But stay tuned, because after the break, Somit and me will be back with Markets at Noon, so don't go anywhere.